Kotak Institutional Equities joins us now to talk about this roller coaster ride that the market has been on in the last couple of weeks. Good morning, Sandeep. It's been a very rocky last 15 days for the market. How do you see the trend pan out from here?
Well, we believe that the market needs a correction. We've been saying for some time that we would expect the market to fall below 8,000. A good entry point for the markets would be around 7,800. Unfortunately, the market has been gyrating. Every time we see the market going up, there are either there's some news from overseas, or there are issues in terms of legislative agenda not getting through in India. So we see corrections coming through. We have not seen a pronounced longer correction. I think the macro is sound. I think the agenda of the government is very positive. But I think there are going to be short-term headwinds. The earnings season in April has not started on a great note. In fact, mostly in large-cap stocks, we have seen disappointments in almost all sectors. Banking in particular, we have seen the public sector banks disappoint. So clearly, there is earnings headwinds coming through for the market. I would expect the same to happen next quarter, which is for the June reporting season in July. We will see the similar kind of situation. Clearly, only after July, the market may have a new data point. If the monsoons are good, that is also a big if right now. So only if the monsoons are good, maybe the data points start improving. So in the meantime, I would think the markets should trend down, and in the best case scenario, they will be flat. A good market correction would be actually necessary for investors to get a good entry point.
Okay, so the short point is that it's better for investors not even to plunge just now, but just wait for better levels to come.
We could, definitely see lower values come through. The only outside-the-box event that can happen for India right now is if there is any surprise RBI action on the rate side. So if that happens, I would think even if that happens, that would be a short-lived positive fillip to this market. It cannot change, what the market is facing on earnings and what the other issues are happening on global growth and the taper tantrums which can take place in the summer, which is June, July, August. So these issues are not going to go away in a hurry. And we should be mindful of that and wait for lower levels in the index to make an entry.
Okay, fair enough. Have we reached a stage in this market, Sandeep, where investors have started to become wary even of high valuation stocks, even if the fundamentals of the stock is strong?
I think high valuation stocks will take a beating. I think if earnings growth does not come through in this market, valuations are at risk. And especially for the pharma sector, we have seen the beginning of the result season. The first few indications have not been overly positive. I think we will see more of that happening for most of the stocks. Even in the consumer names, which are expensive, earnings have been modest at best. So clearly there are issues. I would confine myself to the auto sector or to the financial sector. I think Axis Bank is interesting. It's a good trading stock. Auto sector, we have liked Tata Motors, and we continue to like Maruti.
Okay, how do you approach the PSU banks in that case? Weak earnings delivered, but some of them at least showed some asset quality stability. Any value, or do you stay away?
We could see value to come through in the PSU banks, but I would be very careful to look at balance sheets. I think we'll have a longer upturn cycle than anyone expected last year. This upturn cycle could take another year at least, if not longer. So we should stick to quality in the financial sector. I would stick to private sector banks.
Okay, so stick to private sector banks. Before we talk about more stocks and sectors, overall, have you scaled down your earnings estimates for FY16 after looking at the earnings this quarter? Will FY16 be worse than what was expected earlier?
Yeah, I think we have seen incremental cuts in earnings growth. And we are now still talking about FY16 growth in the 14 to 15% range. I think that is something which is clearly a challenge in the current scenario. Until we see a bigger rebound driven by the macro turning around after July, That would definitely be a challenge. I think the biggest sector to contributing to earnings is essentially banks and energy. Both those sectors are not going to show major earnings rebounds in the current scenario. So yes, earnings decline will continue. Probably will end the year in the region of 9 to 10% earnings growth, as I see it right now.
Actually, Sandeep, where do you see the next positive trigger coming from? There seems to be no upside to either earnings or reform momentum, and not even global cues in the near term.
The biggest positive trigger will be, I think, what's happening in the parliament and what's happening in the elections, which will happen in Bihar. So this will give, if the ruling BJP party does well, or if the BJP manages to get the legislation, its reform legislation, whether it's GSTA or the land bill, go through both the upper and the lower house of parliament, both the Lok Sabha and the Rajya Sabha, that's when we will see confidence come back to this market. Otherwise, it's going to be a slow burn, as I see it. There's indeed, going to be a lot of hard work necessary to sort out, some of the difficulties that have arisen for most corporates in their balance sheets and top line and margins. So that will take more than a year to sort out. So the market will give you enough opportunities. The market will have a couple of periods of good numbers. And whenever the market rises, it's actually essentially only on flows. Whenever the market rises, we have not seen big fundamental announcements or changes or something incrementally improving in the earnings outlook. So if anyone gets very excited because the market's gone up 2 days or 3 days in a row, we need to see whether there's something fundamentally driving that. The market went up and re-rated from last year essentially on the back of higher GDP growth, better policy environment, possibility of stronger earnings growth. And these are the things which will sustain the market trajectory upward. And these are the things that one should look out for a longer term investor. If it just flows, then it will always be temporary.
Okay. Coming back to some individual stocks, you mentioned earlier that you like good quality auto names like Tata Motors. What about the pure play commercial vehicle stocks like Ashok Leyland? There are some concrete signs of recovery now.
Yeah, we like Ashok Leyland. It continues to do well, especially because the southern region has performed better in terms of overall truck sales than the whole of India. But for heavy commercial vehicles, we already see an uptick, especially after the coal bill has passed. We see an improvement in the environment and requirement for heavy commercial vehicles and trucks come through. So clearly, Ashok Leyland is a beneficiary. Not only that, Tata Motors, as I've been saying on the channel for a long time, is a beneficiary if the trucks space starts improving in India. But the JLR, which is their UK and international business, is clearly doing a fantastic job in terms of its models and in terms of its pipeline, in terms of new introductions in cars. So that's something which will help JLR. Other than that, I think we have to be selective, and that's in the auto ancillary space. We like Motherson Sumi. That will continue to do well, and we hope that the business picks up not only outside India but also in India. So there are these names. We can look at Asian Paints, which again benefits from the consumption cycle coming back after July, August. Anyway, the second half is stronger for the house painting season because of the Diwali season and so on. We've seen margin expansion happen in that business. So all that makes for very selective and stock picking kind of market right now rather than a one-way bull run.
Okay. Finally, Sandeep, with the rupee falling, are technology stocks that bit more attractive? Would you advise buying now?
Oh, in the IT space, I think IT space essentially is a macro call. Whenever we see currency depreciation and when we see the US coming back in terms of its economic environment, that's essentially when Indian IT performs the best. Right now, I think we are going into a zone where the rupee will get weaker. We are going into a zone where the US economic environment remains fairly fine, fairly stable and strong. So in a market which is trending down, Indian IT looks good. Our top pick remains Infosys and TCS. These are the two names that we continue to push. But the Indian IT is a contra-India pick. That is that if you have some worries about India, then you look at Indian IT. It cannot play with the broad India story as such.
All right, Sandeep, we leave it at that. Thanks for joining us and talking about your view on the markets and a whole host of stocks that you have discussed with us. That's the word coming.